Our next panel is the crypto investments panel. So we have
Hey everyone, I'm Michael Feng, the moderator. Thanks for being here. I'm pleased to announce that we have an all-star cast of people who are very experienced in the crypto world, especially from a investment perspective. So hopefully we can offer some insights today to you guys. So just to kick things off, I'm a founder of a startup called CoinAlpha. We run a platform that creates blockchain-powered funds. The first one is our own quant hedge fund. And the reason we use a blockchain is because we can cut out all the intermediaries that are associated with a normal fund, like administrators, accountants, and banks. And so by doing that, we can bring access to funds, not just for the privileged few, not just for institutions, but to normal investors like you guys. But my interest really, the reason I got into this space is because what I see now is like all these startups are raising capital via ICOs. You have mainstream companies like Kik that are launching tokens. And what I see is that in 5–10 years, tokens will become the third major form of financing after equities and debt. And so, when we think about the rise of tokens as an asset class, the natural place to start is how do you invest in that asset class? And so my first question to the audience is, please tell us about your fund and what your investment thesis is. Eric?
Yeah, cool. So my fund is called INBlockchain. We're the biggest crypto fund in China. We also run a couple of exchanges, and we have a product studio that incubates other kind of interesting blockchain applications. Our thesis is pretty varied. I mean, so we do active trading, and then we also have sort of a buy and hold portfolio, and then we're also pretty active on early stage blockchain deals. And we focus both on China and then also on the global market.
Cool. So my name's Jordan. I run Scalar Capital. That's our fund. So Linda Shea and I are partners. We just came out of Coinbase, left about 3 months ago. We're focused on these assets as exciting new technology, and we believe that crypto assets generally will unlock all kinds of potentially previously infeasible economic activity. So through these assets, through these public peer-to-peer networks, all kinds of value will be accrued, and the holders of those right assets will be greatly rewarded. So we look at the space very much like a venture capitalist would. We look at the team, we look at the technology, we look at the market, we look at the roadmap, the story, the community, and we really are kind of kicking the tires on those stories from time to time to make sure that our investments still make sense. But we are basically placing broad bets. Bitcoin's number one. I'm still very optimistic about Bitcoin, but there's a chance that something else will eat into Bitcoin's share and possibly overtake it. So we really think a diverse exposure to many exciting assets is the right way to play this space.
Thanks, Jordan. Jacob Cheng, I think we just met before. The Collinstar Capital is the mother company which we mainly focus on. So recently we set up a new fund called Blockchain Ventures. So this is a fully licensed venture capital funding. So we're looking at the blockchain-related equity and as well as the ICO projects. So we're looking for the early stage of investment in all the blockchain-related projects as well as the company shares investment as well. So previously we're looking at more looking at the Chinese-based or Asia-Pacific-based projects, but now we turn our direction to the North America as well as the Middle East and some of the European projects as well. So we at the middle of this year we are heavily involved in one of the projects called ICOage. So right now, besides all the things which I mentioned above, so we're also looking at any of the projects which is related with can be our ecosystem of the ICOage project itself. So this is what we're looking for. Thanks.
Thanks, Jacob. Obviously, everyone in this room is aware of the meteoric rise of Bitcoin and other currencies this year. In fact, I think I saw a stat that over the weekend, Coinbase was the #1 installed app in the App Store. Period. And so it's clear that there's a there's been a realization among the retail investor base that cryptocurrencies are attractive. As people who have been involved in the space for a long time and serious investors, how should the retail investor look at this?
Yeah, so I think it's an interesting question. I think actually and I think this is really unfortunate, but the access to promising crypto projects for retail investors has gotten a lot worse over the past 6 months. So early on, a lot of really great ICOs were available to anyone who could read a white paper. And now what we're seeing is, the best projects will go to people like us first, and they'll get a seed round, and then at that point, maybe they'll offer something to the public. And that's, it's a bummer because the whole point of this was sort of to democratize access. So it's great for us, we get access to these early deals, but I think for retail investors, ICOs are maybe less attractive now. And if someone was getting into blockchain investing, now I would basically say buy Bitcoin. And I think that's sort of the strategy.
To add on to that, so I think we're all captivated by this meteoric rise, and everyone's wondering, is this a bubble? Is it not a bubble? Should I buy in now? And I think there's really no easy answer to those questions, and the right way to get into crypto, especially if you're not involved already, is to really just choose an amount that you're comfortable investing and invest it over time. So if you're ready to invest $5,000, $10,000, why don't you just invest $1,000 a week until you have that amount deployed into crypto? This is known as dollar cost averaging, and this is really the best way to enter. It reduces your market timing risk. There's fluctuations, there's volatility. So you really don't want to expose yourself to a concentrated market timing risk in one point in time. You want to get in over time, and this patient approach is really the right way to enter.
Thanks. I think to answer this question, the first things I would suggest everyone who want to be the investor of the cryptocurrency to ask yourself how much of the amount you can allow yourself to lose, which will not dramatically affect your daily life and your family and your kids. So the reason I'm asking that, I need to ask yourself that is that from now, even though when we're talking about the Bitcoin itself, it's still very volatile. So every time when I being asked for the same question, I will just to tell them that, first of all, just to prepare a certain amount which will not affect your life, and just to invest in one of the token or one of the cryptocurrency which you do your fully study and hold it for at least, you want to hold it at least half a year or maybe a year. Because a short-term investment might give you some of the good return, but it will not last for long. So my suggestion would be take a portion which you will be able to lose, and then just to keep it for long. Thanks.
Thanks, everyone. Those are great responses. On the flip side of the coin, while we think cryptocurrencies is a large market today, it still pales in comparison against the larger institutional market, which is probably a couple $100 trillion today. But that might change with the announcement of Bitcoin futures, which are launching today on the Chicago Mercantile Exchange and the Chicago Board of Options. How do you guys think that having an active futures market in the traditional world will impact the cryptocurrency market going forward?
Yeah, so I've thought a lot about this. So I've paid attention to capital markets for a long time, and the truth is that the current capital markets, stocks, bonds, real estate, it dwarfs crypto by orders and orders of magnitude. So most people's assets are held in their traditional brokerages. They're held with people like Fidelity, Merrill Lynch, so on and so forth, these investment banks. There's a lot of capital there that's very curious about Bitcoin. They just don't have an easy way to get into Bitcoin. They don't want to withdraw and set up to a Coinbase account where it's not regulated by all the federal agencies and so on and so forth. So there's a lot of people very interested in crypto that want exposure. They want to trade this, professional money that wants to get involved, but they really just can't until today. And so today we're going to see the Chicago Board of Options Exchange launch the very first futures product. CME will follow in a week. These products, it's not clear how they'll trade in the short term. And there could be some shenanigans, so trade with caution. But I think over time, this is just giving an entirely new market and a very big market access to Bitcoin. And I anticipate that it'll trade at a premium. And then over time, arbitrageurs and hedge fund types will trade down that premium. But I think that trade will be available for a long time to actually sell futures and buy spot. And that's a risk-free way to make money, I anticipate. And should give the markets a lot of depth, a lot of liquidity, a lot more volume and stability and maturity. As the futures markets really develop, you'll kind of see expectations and anticipated expectations become more clear. We'll have an arena for people to duke it out on which way they think the price will go in the future. And we'll see some fireworks, I believe.
Yeah. So I think Jordan is right to be, unsure of what the specific short-term influence of this will be. I think what we see with these futures is kind of like an interesting tipping point where, like, early on, if you're a big fund manager, you're worried about getting fired for investing in Bitcoin. And at some point, it tips and you're worried about getting fired for not investing in Bitcoin. And I think we're, like, approaching that point. And this is probably sort of the tipping point, right? Where you get these institutional products. And, besides these futures products, like, basically every finance person that I know working at a big investment bank has said, hey, like, you can't talk about this, but we're working on something huge. So there's a lot of stuff in the pipeline. And I think that the market the depth and the liquidity are going to increase a lot over the next 6 months to a year.
Yep. I think from my point of view, I would just expect or just hope that the CBOE or the CB they open the future of the Bitcoin will give a good example to the Chinese government, so that when they can just say there's a good way to launch and control and manage this digital currency, so that they can welcome back this business back to China, because we have so much of the participant and also the entrepreneur in this industry. I think there'll be some time it will going to happen. So yeah.
Great. I think that maybe one question to kind of like stir some debate. I think obviously there's the buy and hold Bitcoin has been a very attractive strategy over the past few months, or a few weeks, I guess. And so I think a lot of funds, because we're more diversified or we have different strategies, our returns don't look as good. But so when we guys talk to larger investors, how do you look at that trade-off between buy and hold versus doing a fund? And more specifically, how do you benchmark your performance versus other alternatives?
Yeah. So I mean, we internally benchmark against Bitcoin because that seems like the kind of just the right thing to do from an internal performance perspective. But obviously, like, we take fees in fiat because in a product sense, like, we're competing with every other fund out there, and they also all do that. And since our returns are really good, like, we can get away with it. Our LPs are okay with that. I think that really, though, there's like basically two really productive fund strategies. Like, you can either get in really early on good deals, or you can have an active trading strategy. And I'm not super bullish, and I'm actually kind of like bothered by funds that just hold a diversified portfolio. Like, that doesn't really make a lot of sense to me, and I think it's, right now people can get away with it. I think in the long term you're going to see much better returns from people that are actually doing trading and are looking at other sources of returns, like arbitrage and that kind of thing. So I guess for us it's like, internally I think to stay honest you need to benchmark against maybe Bitcoin, maybe a portfolio of Bitcoin and some other stuff. But if you're just benchmarking against fiat, that's kind of a joke.
Yeah, so I think it's important to kind of take your performance in context of Bitcoin. But I also think it's important to get exposure to new tech that potentially may have different applications than Bitcoin, or may even supersede Bitcoin in the long run. I'm optimistic that Bitcoin will continue to be #1, but it's no sure thing. So we actually are of the opinion that asset selection is really a specialized skill still to this day. There's a lot of noise, there's a lot of junk projects out there, and then position sizing is also not a trivial task if you really want to place your bets in the proper way. So I guess I'll disagree with Eric a little bit about whether or not a diversified exposure is a worthwhile investment at this point. I think it still is, because it's so new and it's really difficult to research, custody, and manage investing in this asset class.
Well, so just to interject there, I think the custody thing is totally true. Like, and I totally neglected to mention that, but like, I don't think you're crazy for investing in a diversified portfolio if what you're actually buying is like good custody, because custody of these assets is insanely hard. Like, it's just, you cannot overemphasize how difficult it is to safely manage a lot of any crypto asset. And so like, if you're paying 2 and 20 to have someone else manage that, I think you're getting a good deal.
Thanks, Eric and Jordan. So from my point of view, of course, that Bitcoin itself take a big chunk of the from my portfolio, but at the same time, just give you a number comparison. So if we compare the Bitcoin price, even though about 2 days before, so compared with the early of this year, it's about 10 times in terms of the US dollars price difference. So, but while our funding, when we just to calculate our recent performance, the return is actually about 19 times. So what I mean is that, of course, the Bitcoin would take a big chunk of the portfolio, but at the same time, you need to looking at some other very potential good ICO projects, which it was representing for the future trend of this blockchain industry we're going to. So at the same time, we also, because the current license of our venture capital is allow us to do the share and also the equity investment as well. So we're also looking at those very valuable assets which will bring this industry fundamental things like the POW mining, as well as the researching for the blockchain technology. That's it. Thank you.
And just to answer the question for our own fund, we're one of the active trading funds that Eric mentioned, except we use machine learning to algorithmically trade the markets. And our goal is to give investors hedging on the downside. So what we look at is our metrics like Sharpe ratio, max peak to trough drawdown, and Sortino ratio vis-a-vis investing in Bitcoin and Ethereum. Let's move on to kind of like I think to stir up some more debate. I think there's been this conventional wisdom in the crypto world that you should invest at the protocol and the infrastructure layer. The thinking is that right now we're still in the early innings of a long ball game, and that the value will accrue because of tokenization to the protocol layer. However, there's been recent changes, most particularly with a rise of an app called CryptoKitties, which may challenge that. So for those of you who don't know, CryptoKitties is an Ethereum-based game where you breed digital cats. It went viral last weekend, and some players in the game made hundreds of thousands of dollars simply by selling them to people who came in later. And so to this day, I think as of yesterday, about $10 million has been transacted on the platform, a lot of that going to the people who created the game itself. So that's clearly an app. I think a lot of these things that have been done so far are clearly protocols. And the question is, as investors, where do you fall in that debate, or is it even a real debate?
Yeah, I think it's not. I think this protocol versus app thing is like just some thought leader bullshit. And in reality, there's a lot more nuance to it. For example, projects that are building on top of Ethereum, like does that value really accrue to Ethereum? I don't know. There's a lot of scenarios where it's actually bad for Ethereum. Like there's something I've thought about a lot, which is like, if you ever have some token that's value actually exceeds the underlying network, then you have a really scary sort of 51% attack scenario where like by 51%ing Ethereum, you also gain control of all the smart contracts on top of it. So I think there's a lot more to it than that. And I think when you're picking projects, like this idea of like, is it a protocol versus is it an app, is maybe not super useful. I think the cat app is interesting. Like I lose a Bitcoin. I have to pay 1 Bitcoin if I say the name of that cat app because I got a bet with someone. But it's a cool thing, and like I think there's going to be a lot more of it. So I think investing in that kind of thing, like people shouldn't feel bad or shouldn't think like, oh, I should be investing in protocols. Like there's going to be a lot of interesting applications on top of these protocols that will also make a lot of money.
Yeah, I don't think there's an easy answer either. I think that it is generally safer to bet on protocols because, you know, if it's a great protocol, then there's going to be many applications on top and you can benefit from any one of them versus concentrating your bets on a single application at the higher level of the stack. So you know, it's safer probably to stay in protocols, but it's a case-by-case investment thesis for every story that you get into. And if you can make a compelling case for your application and you have traction or you're seeing traction or you have a real reason to believe traction will occur, there's nothing wrong with investing at the app layer. So yeah, I guess you have to really evaluate the specific story of the asset you're looking at.
Because where do we even, I mean, I think like Ethereum is the classic case, right? When people say like value should be accruing to Ethereum, but like most of these apps, there's many, many, many apps out there that could easily use Ethereum, and instead they have their own token. And so that kind of strikes me as like a sort of obvious no case to this idea of like, oh, protocols are better. I mean, Ethereum's the protocol, but it's not
Ethereum is benefiting from all of those. I mean, people are paying gas anytime they use an ERC20 token, anytime that anything happens on top of the Ethereum network, someone is spending Ethereum. So that's creating a natural demand for Ethereum.
But on the other hand, like all these projects, when they launched, they had to do an ICO in Ethereum, and they now have to sell that Ethereum off. And so like Ethereum is suffering from this enormous sell pressure from like these enormous ICOs that just have tons of Ethereum. So like, I mean, I agree, like long term, yeah, like there's gonna be some value. Like short term, it's not so clear, I think.
Yeah.
And just touching on one thing you mentioned earlier, Eric, which is custody. I think it's a very important thing. I think something that a lot of people who are new to crypto don't understand why there's risks and what professional asset managers do to mitigate those risks. Can you go into more detail?
Yeah, this is something I'm super passionate about. So I think like crypto is really cool because if you store it properly, it's like the most unseizable thing in the world. But that storing properly is super, super hard, and most people get it wrong. And so you see, you know, right now, like crypto is the biggest hack target in the world. It's much, much, much more lucrative to hack crypto projects, to hack exchanges than anything else because like you just get money. Like you hack this thing and like that's it. You just have liquid money that you can immediately go spend on an exchange. And so like I think what you said is true that like, yeah, like retail investors or people like are not prepared for the security threat that they face. And I think maybe it's even scarier for people that got in really early. So like there's a lot of people that, you know, maybe bought a few thousand Bitcoin when Bitcoin was really cheap, and now they're sitting on a scary amount of money. And if I told you like how these people were storing it, I mean, you know, there's people that have like, you know, a wallet on a Windows laptop that's got like a couple thousand Bitcoin in it. And so I think, yeah, like we'll see a rise of people who are paid to do custody just like we do in every other asset class. And I think it's going to be a super, super interesting next few years.
Yeah, so right now we're in a place where a lot of funds like ours need custody solutions and they're just not there. So right now we're building our own proprietary cold storage system. It uses a simple secret sharing algorithm, Shamir secret sharing, to split the key into many pieces that get stored across people and in different locations. This allows you to, you know, lose one or two shards or pieces of the key without necessarily losing safety of the funds. So it's a, you know, relatively technically involved challenge to build this system, and it's not something I would recommend to an average layperson. For you guys, I would recommend just a hardware wallet with backing up your seed in a very safe, physically safe location. But we're seeing, you know, many custodians entering the market or talking about entering the market, and I think we'll start to see viable solutions in the next six to 18 months. But right now, it's really, you know, you have to do your own crypto custodian solution, which is not fun.
Thanks. So yeah, totally agree with this because even for myself, just for your information, I'm a very heavily user of the hardware wallet. So up to today, I've used, I mean, get it broken. I mean, I didn't do anything. I didn't use a hammer just to smash the hardware wallet. But I used up to 5 hardware wallet just because of like the manufacturing defects or whatever things that are heavily used. So and also when you're facing the hardware wallet broken, you're facing a lot of pressure as well. You're going to want to recover it through your the seeds. So and I don't really think that most of the people will be able just to do such things in your daily job. So I think this is really necessary for the custody. The product needs to be done.
Yeah, I think I would add one thing, which is just that like we have only seen the very, very beginning of you know, crypto attacks. And so right now, like most of the attacks you see are really no different than than hacks that happen on Facebook or on any other system. It's web security is the issue. And we're going to start seeing extremely scary stuff. It's going to be there's going to be physical security issues. People are going to get kidnapped. There's going to be, you know, mixed attacks. There's going to be all sorts of because it's just the amount of money at stake is too huge. And so I think custody is something, like actually like as investors, we're pretty interested even in investing in custody solutions, just because there's going to be so much demand for that.
Yeah, I agree. And also, even though the current hardware wallet, most of the hardware wallets on the market is not protecting from the side attack. So yeah, I mean, if you do something with the cryptographic, you will know what I'm talking about. So yeah, even though the hardware wallet is not just like 100% safe, so this is really necessary for just to do the custody.
Totally, yeah. Actually, so some of the new generation of hardware wallets have a feature that I really like, where like they have 2 pins, and so if you enter one pin, you get your actual wallet, and if you enter another one, you get like a fake wallet that just has like 1/8 of a Bitcoin in it or something. So this defends against like, there's this great XKCD comic of like the wrench attack, where it's like everyone's preparing for like some really complicated quantum crypto attack, and like the actual attack is like someone just hits you with a wrench until you give them your private key. So yeah, I think that's like it's a useful feature. We need more of that.
That's really interesting, guys. So let me open it up to the audience and take a couple questions before we convene.
Thanks. I'm John Sylvester from Luna Capital. But I just had a couple questions. I mean, I've got a bunch of questions, but specifically, Eric, you've been talking a lot about custody and hardware wallets. So specifically, which hardware wallet do you choose and why? And then the other question I had, we're talking about crypto investments, and you guys have been laying out some very smart ways to invest in these sort of things. But if you had to choose a non-top 10 cryptocurrency or crypto asset right now and put some money in it, what would it be? Those are the 2 questions. Thanks.
Yeah, so my security officer is going to kill me if I like say exactly what hardware wallet we use. But you know, honestly, like for most people, I would recommend using an old iOS device, which is going to be really controversial. I'm also going to get shit from my security officer for saying that. But I think the convenience for security trade-off is actually really good. So if you have like an old iPhone and you wipe it and you keep it offline and you just have a good hardware wallet or like a good software wallet that way, I think that's like a pretty good mix of like decent security and also convenience. In terms of like a non-top 10 crypto that I think is cool, come back to me on that. Let me think about that a little bit.
Well, I would recommend the Ledger Nano S because they're going to implement Monero pretty soon. And I don't know if Monero's in the top 10 right now. It flirts with the top 10 all the time. I really enjoy Monero. They have a great team and a really amazing design decisions that they've made. They have the Monero Research Lab, which publishes peer-reviewed research. It's been in some very legit journals. They've upgraded their tech on a live blockchain, believe it or not, with hard forks, and it worked just fine. And they have great decisions as far as the flexible block size and the tail emission, which mitigate a lot of risk scenarios down the line for some of these chains. So I think the Monero team is solid, and I really recommend that asset.
So, sorry, the first question is that was the hardware wallet you want to recommend?
Yes, specifically which hardware wallet you would choose.
Okay, so yeah, I mean, I've been used more than 3 types of the hardware wallet. So far, I mean, it depends. If you want to store the Bitcoin, I mean, the best one which I will recommend might be just the Trezor. But if you want to restore, if you want to just to keep many others other than just Bitcoin itself, I would say that Ledger or Ledger Nano S, or even if you want to get an advanced version like Ledger Blue, might be the good choice for if you want to store some other cryptocurrencies other than Bitcoin itself. Yeah, but of course the Ledger, it does have a very good Bitcoin wallet itself. Yeah, and just like in terms of like use, I think yeah, it depends on what you want. What kind of the cryptocurrency you want to you do. The second question is like a token choose. I mean,
Yeah,
Non-top 10.
yeah, non-top 10. But I mean, myself, the Collinstar, we are
I mean, we'll talk about this later.
Okay, I think I figured out the one that I would pick. So
Offline.
yeah, I like Saya. So it's like a file storage project. They've been going for a long time. You know, Filecoin raised like a ton of money, and so Saya has kind of moved out of the spotlight a little bit. But I know the team pretty well, and they're just still cranking on their solution. I think they're like one of the technically strongest teams in the space. They have a token, so everyone knows it. They have 2 tokens. Everyone knows about like Saya Coin. They have another one called Saya Fund that is actually sort of like an annuity on the entire Saya network. And so you get like 3% of the escrows of like every Saya contract. Yeah, it's sort of like that. So I think that one's really cool. It's like super not liquid though. Like one of them goes up for sale every day on like some decks. And I think there's only 10,000 of them total, and they're not divisible. But yeah, I would say Saya Fund is like a really interesting kind of offbeat investment.
Well, that's all the time we have. We really appreciate the thoughts of everyone in the audience today, as well as the panel. We'll be outside, so you can find us afterwards. Thanks.
Thanks a lot.